Welcome to Barchart's series of educational webinars designed to enlighten you on a variety of trading ideas and concepts, inform you of the features and tools Barchart provides related to those concepts, and offer some traders' insight to help you make a more informed trading decision. Today's subject, smarter trading, leveraging Barchart screeners for day and swing trading. Now, there's over 5,000 equities that can be traded every day on the three major exchanges. And discovering opportunities could become a Herculean task. But by the time you recognize a trade, the moment could be gone. And so fortunately for Barchart subscribers, Barchart offers ways to narrow down trading candidates with screeners. And Screener filters through the white noise, improves our tactics, and presents a time-saving tool. Hello, everyone. My name is John Rowland, Barchart Senior Market Strategist. And today, not only am I going to show you how to access and use our screeners, but I'm going to give you a methodology so that you can create your own screener to fulfill your needs and requirements so that you can become a smarter and more efficient trader. Now, before we get to that, this is when I usually introduce our moderator, Jean Baker. But Jean's on vacay this week, so let's wish her an enjoyable and restful getaway. And in her place, I've asked my co-host from our Market on Close show, our Friday show for our Plus and Premier subscribers, Thomas. Welcome, Thomas, and thank you so much for taking time from your busy schedule to help me out today.
Yeah, glad to do it, John. Thanks for inviting me and giving Jean a much-needed break because she works way too hard. So yeah, happy to do this with you, John.
Thanks, Thomas. All right, if you don't mind, I want to just jump right into it. I got a lot to get to today. All right, brother? Okay, so just a reminder that today's session is for educational purposes only, and decisions to buy, sell, or hold, or trade securities, commodities, or other investments should involve advice from a qualified financial professional, and under no circumstances shall we be liable for any loss or damages you or anyone else incurs as of a result of trading or investment activity that you or anyone else engaged on based on the information or material you receive through barchart.com and our services. Okay. So why use a screener, right? What's the purpose of a screener? Well, first of all, a screener is going to improve our tactics, our daily routine. Trading is a discipline. And think about, acquiring a new skill set. As you're gaining levels of proficiency, that requires repetition and consistency over periods of time. And trading is no different. We want to create it's like muscle memory to allow us to quickly find opportunities, and that skill set or that skill building set should be a combination of objectives, right? A discovery of price structure, for instance, price pattern recognition, expectancies, and how to granularize analysis to find favorable outcomes. So we can start with some very simple reference points. Now, these could be static numbers, and they will help us define price movements, and they are the first observations of a dynamic change or potential changes. We're going to be looking for positive expectancies. If this, then that. A plus B equals C. The path of least resistance. Identifying trends and price reversals. I'm going to create a thesis, and this thesis will allow me to employ my strategies. Now, notice how I say strategies here, plural. multiple screeners for multiple tasks and signals. Now, these signals can be trend following, or they could be mean reversion. So what filters and why? And this is really kind of what we want to do today. We want to learn how to build screeners that are going to meet our needs. Now, before I get started today, my background is more from a technical aspect. And certainly your strategy could involve fundamental data, right? And I will show you where that fundamental data can be found in terms of screening. But I'm going to focus more on the technical side of our screeners. So we could just use some simple points of reference, and they can provide impactful information. And I call them kind of actionable evidence. So, again, there are a lot of points of reference, and it depends on the trader and depends on the things that you are interested in. But just some simple stuff here. Last price. As we become more experienced, as we are watching markets over and over again, or as we're looking at, the same markets, you're going to remember levels of support and resistance. You're going to remember levels where market reacted to a certain price. And so last price is going to tell us, are we in at, are we above, or are we below, these actionable levels. A change in price, right? Positive or negative, is price up or down, right? And again, we can think about it as a reference point in terms of, is that positive price action with our trend, or is it against our trend? High and low, very simple level of point of reference, but this can also help us define the probability of range of price. And certainly when price gets above or below a very particular high or low, that could become an actionable piece of evidence. Open. Where is price, right? How was last price compared to our opening price, right? How is it compared to our high or our low? Again, could that be a internal trend that we could see? Is that trend similar to our higher time frame trend, or is it in conflict with our trend? And then volume. One of the things I do like about volume is that volume is a way of confirming price action. So you look at these are just 5 points of reference that can tell us a lot about our potential candidates. And as I said a moment ago, with experience, these key points of references will become more familiar to you, especially when we're looking at support and resistance. But think about this. If I have a market that is up 2 days in a row, right? Our change, new highs, right? That might lead to an expectancy that we're going to see a third day higher, right? Or if I have little or no volume on a price movement, to me, that would be a warning sign or a little or no action on my part of these positive expectancies. So there's other ways we can look at positive expectancies. So something as simple as, let's say, beta. Now, if you're not familiar with beta, beta represents the relationship of movement of the S&P to individual stocks. If this, now the S&P is given a beta of 1, and if a stock has greater price reaction than the S&P, then it receives a beta that greater than 1. In other words, if a stock has a beta of, say, 1.5, then it should move at least 1.5 times as much as the S&P. If this, then that. True range. a measurement of a volatility. But more importantly, this is also a measuring stick of probability. I'm going to show you A plus B equals C. And correlations, they're similar to beta in terms of market performance, but we can cast a wider net, index to index or sector to industry or industry to an individual stock. And this will help us to identify trends. And the trend that we kind of want to look for in a lot of our swing type trading is that money flow of in and out of specific areas of the greater market. So what we need to do now is we're going to build a thesis or a game plan that is going to help to construct our strategy. And we want to use and find corroborating evidence and define signals in terms of that thesis, game plan, and strategy building. So again, depending on the type of strategy I want to do, there are two types of strategies. There are trend following strategies, and then we can think about these positive expectancies, right? A moving average, right? Key moving average, a stock that is trending tends to stay above its moving average. Now, the moving averages that we're going to look at will depend on our time frame. I'm a longer time frame trader or I'm a shorter time frame trader. We can talk about moving averages in crossovers. And we see a difference between a short term versus a longer term moving average. Momentum indicators, for instance, like MACDs and RSIs. These are great tools for us to tell us, is our trend strengthening or is our trend weakening? And perhaps even look at something like gaps. Now, gaps to me represent an imbalance between buyers and sellers. And gaps can be the first evidence of a potential new trend or a continuation of an existing trend. When we talk about mean and reversion, we can use filters, for instance, like standard deviation, percentage from averages, average true range. Again, in our momentum indicators like RSIs and stochastics. So this is what I want to do. Let's keep these ideas in mind as we go through a couple different screeners. And what I want to do now is I want to build a screener with y'all. And then what I'll do later is I'm going to share you a couple of screeners that I use. Now, remember that this webinar is recorded, so you can watch this over and you can see the screener that we're going to build out. The ones that I'm going to share, they are on the slides that are attached to today's webinar. You just go to today's webinar in the archives, and there'll be a PDF file that you can download. All right, and I know I'm going to have to say that again. All right, so here we go. So what's my theme? What's my thesis, right? So I believe gaps are the greatest imbalance between buyers and sellers. And I also believe that volume confirms price. So those are my thesis. So I'm going to go into stocks here and I'm going to look at performance leaders and I'm going to look at gap up. And so what is this? Well, this is a bar chart screener that is going to show us those stocks that gapped up today. Notice that we also give you gap downs. And again, look at the main view page. These are those very simple points of reference. Last, change, percentage of change. How much did it gap up? Was that in a percentage? What is the high? What is the low? And again, volume, very simple terms. But let's now screen on this. Let's create a screener that'll allow me to narrow down these candidates. Now, there's a lot of candidates here, but maybe there's certainly somebody might feel that they could handle that, but you got 145. So let's see if we can narrow down these candidates. So I'm going to come here where it says screen, and I'm going to start from there. Now, what this is going to do is we're going to now screen based on this page, the gap up page. So the first thing I'm going to think about is when a market gaps up, right? And if you believe in gap theory, again, there's a webinar that we have about gap theory. I want to kind of see a stock that gaps and goes. In other words, gaps up and continues in price movement. So the first thing I'm going to go into is I'm going to go into my screener filters, and you can see there's a lot of categories. And again, when I told you about fundamentals, you can see there's a lot of fundamental analysis down here. But again, we're going to spend most of our time today in the technical. So I'm going to go to here where it says gaps and range change. And what I want to know is, where is price now in relevance to the gap, and is price up or down from that range of today's gap? So I'm going to look at percent range, and that is the percent difference between current price and today's open. Now, what I want to see is the market gap higher and then trade higher, right? That's gap and go. That's a real good sign. But there could be moments in time where the market gaps higher and then it comes back, right? A gap and reverse. That's not a good sign usually. A lot of times that price will fall back to the origin of the gap. But if I can recapture today's opening price, that would be a gap and go. So I want to see a gap value, in other words, above our opening price, let's say of 1%, at least some percentage. You can make it whatever you want. Maybe you just make it 0. And let's kind of put a bigger number on the upper end, let's say 15%, right? Some stocks move, multiple percentages in a gap trade. So the second thing of our thesis was volume, right? We want to say volume confirms price. So I'm going to come into price and volume. There it is. And what I want to look at is volume percentage change. And I'm going to add that. Now, what I'm doing here is I want to see the volume that is occurring today is greater than, let's say, an average volume, right? I want to really see that confirmation that volume, right? The traders are interested, there's something going on, money's flowing into it, and volume is the way I can confirm that. So I want to see a percent difference of current volume over, let's say, a 20-day moving average. Now, if you're looking at this in the morning, and the first markets first starts out, you might not be above the 20-day moving average, but from experience, you will see a gapping market that gaps and goes. You're going to see a large volume increase. So let's give this a kind of a decent threshold that we have to jump over, and that would be, I'm going to just say 20%. In other words, I want to see today's volume 20% above the 20-day moving average volume. And then let's look at, is volume building, right? Has volume been building as I go into this gap? Maybe this is at the pressure that kind of set the market on its way. So I'm going to go into technical analysis, and I'm going to look at average volume. And I want to see what has happened over, let's say, the last week, the last 5 days. And now what I'm going to do is I'm going to compare that, or what I'm going to use is called a field that is greater than a static volume assessment or comparison. So I'm going to say, let's say I want to see last week's volume average greater than, let's say, a 20-day moving average or last month's average volume. So very simple here. So I started with a screener that Barchart provides, and now I've added my thesis to it. And now what is my result? Well, let's look at that result. And so what I've done, I've changed that 145 stocks down to 11 stocks. So at this point, what I could do is I could look at each individual stocks. I could go into flip charts and look at them. Now I'm just kind of looking at these as today. Some of them, I've never seen these stock names before, but some of them are certainly household names. Now FedEx gapped up today on an earnings report. So maybe that might not be one of the stocks that I might be interested in because it moved on an earnings, right? That is certainly going to be driving a stock over the next maybe week, 2 weeks, 3 months. But maybe I want to find a stock that is gapping on not a news story or a catalyst event like earnings. So I could go through a lot of these. Now, what I might do from here, again, look at my flip charts. Now, the one that I kind of was interested was, right, this Daktronics. Again, here's a market that had been range bound for quite some time, and now you've gapped up on it. Now, my default screen shows RSIs and MACDs. Again, some technical analysis tools that I use regularly. So this would be a very interesting stock to me. Now, what I like to see is not only the gap up today, but then the follow through. And that's really the importance for us. So this might be a stock that I've identified now, and now maybe I'm going to watch it over the next few days. What I want to start to see is some type of follow through. And then, where is this in relationship to historical data? So there's a 3-year chart. You can see where not only have we gapped up, but we've made, a new yearly high. And that would be definitely an important metric in my analysis. So a very simple screener on a thesis using one of our bar chart screeners. All right, so let's go back. Let's go back to our stock gap. Let's do this one more time before I share some. So here's gap ups again and gap downs. But let's take another thesis. Let's use the thesis of Newtonian physics, right? A body in motion stays in motion. So in other words, I'm going to be looking for momentum. So I want to see which one of these stocks has really good momentum. And so one of the things that I can do, again, I'm going to go back to the screener, is I can look at a comparison in terms of market performance. In other words, is this stock outperforming other stocks? And one of the ways that we can do that, go to technical analysis, is performance versus the market. And again, you can look at a very specific time frame. Now, there is a theory of market performance that says that stocks that outperform for 3 months will outperform for 6 months. Stocks that outperform for 6 months usually will outperform for that year. So let's just look at this list and look at those stocks that have outperformed the market for the last 3 months. And again, I'm not going to put a value here. I'm not going to say how much do I want it to, but you could say that. You could say, I want to make sure at least outperform a certain percentage. Now, I also want a reference point and an actionable reference point. So what could we think about? Well, if we're outperforming on a 3 months basis, then maybe what I want to say is I want to see this stock continuing to make new monthly highs. So I can go into, again, our technical, or excuse me, I think we'll go into new highs and lows. and I'm going to look at new high date. And again, I could pick whatever time frame. But in this case, let's say I want to see a stock that has outperformed for the last 3 months, but is now making a new monthly high. I'm going to add that. Now, again, I can set the date of where I want that new monthly high, but let's just do something to say, hey, let's say, has that stock made a new monthly high today? Again, look how simple we are screening on this data set. And again, I'm going to check that result. And again, I get 35, right, not less than that 145 stocks, but certainly what I can see here is now I can separate these or sort these based on gapping up, outperforming, and making a new monthly high. So what I might do here is sort this by the performance and say, okay, which one of these has been outperforming the S&P over the 3-month period. And again, notice that we see a couple lot names that are more typical, or I would say more in the news recently. Applied Data Corp, Rivian was another stock that gapped today on news. But let's go to this one, Scorpio Tanker. And so I'm going to go to my flip charts. And here it is, Sting. And this is really what we're trying to do, that skill set, right? That we're using these screeners to build a skill set. So I'm just going to change my time frame here for 1 year. And again, remember, this stock has outperformed for the last 3 months and today is making a new monthly high. So what is that telling us? This stock has a lot of good momentum. But look at this over the last year. Is there a pattern recognition that we're seeing here? And I say, yeah, right? Here's a stock that continually bases, gaps, makes a new high, base, 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 gaps, makes a new high. So is there a pattern recognition here? Is this a stock that I want to trade for momentum? I mean, I will leave that open-ended for you to think about that. So if I like this screener, what I can do at this point is I can come back based on these parameters, the filters I just set, and I could save that screener. And so I could call this, just call this my Newton filter. In other words, right, I'm looking for those stocks that are in motion and that are continuing to stay in motion. And then I can write a description here. One of the nice things about being a premier member is then I can have these screeners sent to me on a daily basis at certain times of day and based on a number of results. And that, again, will make me a lot more efficient in time saving in terms of my that exercise or that discipline of that building my screen, building my skill set, so to speak. All right, so I just want to kind of talk about this idea of screeners, because what I'm going to do now is I'm going to go back into stock screeners, but I'm going to load a screener of mine. This is where I'm going to share it with you. So, if you have a membership, a basic membership, in other words, a free membership, where you've just given us your email and you've set up a password to have access to Barchart, you get one free screener. If you're a Plus member, you get 10 screeners. And a Premier member has unlimited screeners. So let me share one of my swing screeners for today. So I'm going to go to, let's see which one I want to share. Okay, 52-week high plus. And again, there's a screenshot of this that's in the PDF file, so you can go back and walk through this. But again, let's just look at the data that we're in here. And what's the thesis of this one? Well, the thesis here, or the theme, is I'm looking for stocks that are making new monthly highs, that are in a defined uptrend, and are approaching or breaking out of their 52-week high. And I want to see rising volume. So the first data point that I'm going to look at is I'm going to look at new month high. And again, one of the things I learned from some of my mentors is when a stock makes a new 4-week high, that's usually a good sign. In terms of our expectancies, usually when a market makes a new 4-week high, it usually will fall through. It will continue to go in that direction, that positive expectancy. So a point of reference now becomes an expectancy. So now I want to look for uptrending price, right? Remember, price above a moving average tends to stay above that moving average if it's in an trend, an uptrend. So what I'm going to do here is I'm going to layer or stack multiple moving averages, because that's going to give me a more greater confidence. So I want my price to be above my 20-day moving average, but in this case, I want my 20-day moving average to be above my 100-day moving average. A short-term moving average over, let's say, an intermediate moving average. And I want my price to be above my 50-day moving average, again, on a field above my 200-day moving average. So what I'm doing here is I'm looking for price, and I'm stacking the 20, the 50, the 100, and 200-day moving averages. All of them should be increasingly higher, and this would be a greater confirmation that I'm in an uptrend. Now I want to know if I'm getting close to my 52-week high. So I'm going to look at a percentage from high. In this case, my percentage from high is going to be about 5% of a 1-year high. So what I'm looking for is those stocks that are close to breaking out of a new yearly high, 52-week high, or are breaking out of a new 52-week high. Now remember, and this is an adage that I live by, is that you can't make a new high without taking out an old high. So within 5%, I think, is a very manageable number. Anytime you get a little bit higher than that, you're going to get a lot of candidates. If you want to narrow this down, let's say 2 or 3%, I mean, that would be fine as well. And then remember volume. So volume in this case, I'm going to use one as a reference point and one as an expectancy. So I'm going to look at the 50-day moving average volume, and I want to say that I want it to be greater than a certain number. Now, what this will do will filter out a certain amount of candidates based on small caps or maybe penny stocks, but also it will help support liquidity. In other words, I want to see enough price action and volume that will support my trading activity. And the higher the amount of daily volume will shrink those bid asks between buying and selling. So that's kind of where I'm at with this. And again, from experience, you're going to find your own threshold. It could be 100,000, it could be 200,000, could be 500,000. Maybe it could even be less than that. Well, I'm just using a round number here, about 300,000. And then finally, then that expectancy, I want to see my 5-day volume greater than, or 5-day volume average greater than my 20-day volume average. Again, here's an expectancy, right? I want to see that technical aspect of rising volume confirming that price action as we're getting to break out of or getting near our most recent 52-week high. So again, let's go to that. And, again, we've got 54 stocks that I could go through. I can look at them. I could go into my flip charts and look for pattern recognitions. Here's one that it looks like it's just breaking out. Here's Amgen. I'm just going to go through a couple of these here, right? It's looks like it's trying to break out. Maybe this is a stock I'm going to watch. Amazon, right? Today, I think Amazon is making a new 52-week high. Again, so I could go down that list and look for those price pattern recognitions that I want to see based on whatever trading strategy that I want to use. Do I want to wait for the breakout, or am I anticipating that breakout? Again, here's Google, another one that has just recently broken out of our 52-week high. But again, maybe 54 stocks is too much for you. So let's add some more screening capabilities. And we're just going to add one here. And what I'm going to do now is, now I've collected 54 stocks that are at or near their 52-week high based on the stacking of moving averages uptrending. And what I want to find is those stocks that have paused, gathered energy, and are now breaking out on volatility, right? Again, another tool that we're going to use in terms of our measurement of breaking out on volatility, breaking out on technical aspect. So I'm going to go back into my set filters here, and I'm going to go under technical analysis. So how can I determine a stock that has paused and then is now breaking out of a particular range of price? So I'll go under technical analysis, and I'm going to select something called the TTM squeeze. Now, if you're not familiar with this, again, we have a webinar that goes into a lot of details about this. This is a volatility measurement that looks at Bollinger Bands and something called Keltner Bands. And what it does is it tells you when volatility is really low and then when volatility returns. In other words, price action starts to pick up. And so what we're going to look at is the long trade triggered today. In other words, did my squeeze fire today? And what do I get? Boom, one stock. One stock for me to think about, one stock to look at. And so if I go to my flip charts, here would be a stock that is breaking out, making a new 52-week high, making a new monthly high, and the volatility prior to this breakout was very low, and now we're seeing volatility coming back into it. So this would be a great momentum type candidate. Now, one of the cool things about Barchart is if I go up into this little box here, I'm in flip charts, but you can find this on your regular charts as well. It'll say template up here if you are new to Barchart. But you go in here and there's Barchart templates, and here is the TTM squeeze. So you could click on that and you would actually see the result here. Here's where the TTMs was squeezed, volatility was narrowing, and then this green dot is the firing. Now the basis of the theory behind TTM is now, between now and the next 7 to 10 periods, this is a daily chart, so from the next about 7 days to 2 weeks, this stock should continue to trade higher, or its momentum should continue to go higher. So used our gaps, used a range of expectancies, and now I have found one candidate for today. How efficient is that? Now I'm just going to give you a little, show you a little something that a little bit of interest here. Here's Google, and this is an exercise that I do every day to look for trading opportunities. And Google yesterday gave us the TTM squeeze firing. So here's a stock that we all are very familiar with, which is now telling us for the next 7 to 10 days, Google price should continue to rally because that's what the TTM squeeze is. But think about how we found the stock. It's making a new 52-week high. It's making a new monthly high, and the moving averages are telling us that we are stacked, or in other words, that our moving averages are on top of each other. And here's our 20, 50, 100, and 200-day moving averages, confirming that we're in an uptrend. Okay. All right, Thomas, let's do this. I want to share my day trader one, but I do see a couple of questions. So what I want to do is kind of want to answer a couple of these questions. So give me a moment here to read some of the questions that we have, and then what I want to do is I want to share my day traders one. So Raj asked, how can candidates that are breaking out are great momentum candidates? So I guess, Raj, I guess what you're asking me, right? That's that Newtonian physics, right? Objects that are in motion tend to stay in motion. That's, but here's using the TTM squeeze in terms of volatility is a great way to look at that. So the question is, what stop would I use for, again, and I don't want to really go into, every trader has their own risk parameters, but, in the case of this TTMI trade here, so again, what you could do is, the origin of the explosive move. This green candle could be, if price broke back below that. These are moving averages. You could use that. And then, when you watch the video on TTM, there is a discussion about when these bars, this histogram changes. That would also be a way to manage your risk. So I think we talked about which screeners are good for swing traders. I kind of mentioned that. So questions, can you use a CCI, the Commodity Channel Index? Yeah, that's under technical analysis. That is definitely in there. A question about the TTM is someone is saying is that they have not had good results with it. So again, this is why you need to add some other layers of expectancies, not just taking the trade on that one signal. So in this case, what we're doing is we're looking at highs and lows in breaking out of monthly highs and weekly highs. But here's on the TTM, maybe change your time frame. Try weeklies on that one. I think that might help as well. All right, so if I'm going to pass on a couple of these. I think there's a very specific technical tools. Again, so if you have any questions about any particular technical tool or where to find it, or if we have that available, send those questions to support@barchart.com. All right. All right, so let's do this. Let's go one more before we finish up. And I'm going to go back into my load screen, and this is for my day traders in the room. And again, let me go to my set filters. Let this load up, and here's my set filters. And again, notice my filters here. A lot of points of reference, okay? But how can we turn these points of references into some expectancies? So this one is set up right now to have a slightly bullish bias, but let's go through some of these points of references. All right, and I'll show you how just some minor adjustments can narrow down your candidates. So first of all, last price, right? The change, is it up or down from yesterday? How much is that change in percentage? And again, here I'm just using, I want to see up 0.5%. Now, again, as a day trader, you might not want to see that large of a move, right? You might say, I just want to see it up maybe 0.1%, or maybe, you know, 0.25%. Or you might say, hey, I'm going to set this trade up maybe on a bias in terms of a bullish buyer, but I'm looking for buying opportunities. So maybe I want to see, it a lower percentage, maybe 0.25% lower, right? A little dip before a rally. Open price, right? Again, a point of reference, but again, an expectancy is last price above or below our open price. In other words, am I seeing an internal trend for today, or am I seeing a mean reversion? Our average true range, or our true range. And again, some small adjustments here can change the number of candidates. But again, as a day trader, I want to make sure that there's enough price movement on a daily basis based on our ATR to give me that opportunity to get enough reward based on the risks that I might set based on a day trade. So again, these numbers, you could change them around yourself. I want to see at least $1 move a day, maybe even more. But also, I want to use these as a comparative. So I want to see a shorter term, a greater ATR greater than, let's say, an intermediate or a longer term. So that's why we have a 9-day ATR at 1.5 or $1.5 versus a 20. Again, really, this is more of I want to see on the comparison basis an increase in volatility in a shorter period of time than in a longer period of time. High-low, again, we're going to use these reference points to also use them to give me that actionable evidence. And I'm going to show you that in concert with our ATR, that A plus B equals C. So stick around for that for a second. Okay, moving average, right? Short term versus long term. Again, that stackability. Again, a trend identification. And then, RSI. I'm looking at RSI, relative strength index, in 2 time frames. Again, a momentum comparison. Now, I'm pretty proud of a webinar that I did recently on RSI. I think if you're really interested about how you can use RSI as a technical analysis tool, I would recommend that you watch that. Then short-term buy signal. Now, this is found in our screeners under our bar chart opinion. And there it is there. And you can look at a variety of time frames to find that one. And really, this is not a fundamental recommendation or opinion. This is purely technical. It's based on some short-term technical, right? Again, I'm using that as a bias for my thesis. And then I've added market sectors here. Now, I'm using this as part of a screening process, but really what I want to do is I want to watch what sectors, which stocks are starting to perform a certain way. And this could also lead me to finding that flow of money. For instance, over the last few days, I've noticed as I've gone through this exercise, a lot more of our tech stocks have been regaining market momentum. So that might be, as a day trader, if I have a bias, then I would only maybe sort based on, let's say, my computers and technology sector. And then volume, again, just a threshold here. I'm a day trader. I want to have a market that is healthy enough to support my activity. Again, narrowing my bids and asks. And again, this can be based on your own risk parameters, but 1 million contracts, I think, is a very attainable volume for some of our, let's say, medium to large or to our mega cap stocks. All right. So let's go to the results, and then let me show you how you can use this in your access, and also how we can use some of the templates that we have in concert with some of these measurements. So let's just look at Apple right here off the top. So what do we see? Let's look at this. So, this is late in the day, but let's see what Apple has done so far today. So the last price is $213.76, and the change for today is up $4.69. That's about a 2% move. So, most markets move on a daily basis, somewhere between, let's say, a half of a percent up or down to maybe about 2%. So this, you can really see Apple is kind of outperforming on a percentage basis today. So what was the opening price? Well, the opening price was $211.50, and currently we're at $213. So what's our internal trend? Well, our internal trend at the moment, as it looks like, is up. What's our ATR? So our ATR here, our 9-day ATR is $5.19, and our 20-day is $4.50. So what is that comparative telling us? Well, it's telling us that in the short term, there's been more volatility in Apple than there has been, let's say, over the last month. That's a good thing for a day trader, right? We embrace volatility. If I saw my ATR was less than my 9-day ATR was less than my 20-day, then that would tell me that volatility is coming out of the market, or that if they're the same, right, we got about a consistent volatility. And then my high and low, again, these reference points. But here's where we're going to use our ATR with our high and low. So let's go back to our ATR in Apple here, and we can see that our 9-day ATR is just above $5. Our 20-day ATR is $4.55. So here's what I'm going to do. As the market is opening, in that first, let's say, 5 minutes, 15 minutes, I like to wait for the 30 minutes. I'm going to look at the high and low that was created in that first 30 minutes. And then I'm going to, listen carefully, add the ATR to the low and subtract the ATR from the high. And what this does now, it gives me a range of price probability. So the low here is 210.64. If I looked at the 20-day moving average, that would put us around 215. If I looked at the 9-day, that would put me around 216.10. So that is the high end of the range that I would perceive for today's price. In other words, a playing field of probability that I'm going to design all my trades that are going to be inside of that playing field of probability. Again, on the downside, if I subtracted $4.50 from my high on the 20, that would put me at around 210, 210.30, and $5 puts us at around 209. Now notice that the 9-day ATR subtracted from the high, again, I would look at the first 30 minutes, but in this case, we're just using the data that's in front of us. Notice that that level would be right around our 5-day moving average. So I have a bullish bias. I want to look for opportunities to buy the market on or at some of our moving averages. And that would have been a really great entry point. Again, I could sort this by sectors and then see which ones that I see a lot more activity. So we get a little bit of a mixed bag today, but as I said recently, a lot more computer technology ones. So let's go to our flip charts, and I'm going to show you how to now take this to the next level for my day traders here. All right, so I'm going to go back into my templates here, and under Barchart templates, here we're going to open up one that's called the 13 EMA and pivots. And what the 13 EMA and pivots does, it gives you a 5-day chart on a 30-minute time frame, and it also gives you today's floor trader pivots. Now, if you're not familiar with floor trader pivots are, There are just numbers that are based on yesterday's price action that gives you levels of support and resistance. And you get a 13 EMA. In other words, a 13 EMA, since it's a 30-minute chart, over 30-minute periods. Now, if you do market analysis and you're familiar with time frames, there are 13 30-minute periods in one trading day. But you can use this as to identify internal trend, and you can use it as a risk management tool. In other words, if price breaks your EMA, be on the downside, closes below, that would be a time to exit the trade, or if you were a short and it breaks above, that could be a time to exit that trade as well. Okay, so let's go back. Here we are. Here's our opening candle. Here's our 9:30 candle for Apple. And so this is a kind of a nuance here with based on ATR, but here's the theory. Here's our low, which is around 210, which we said was our low was 210.65, and our ATR was 450 to 520. So we add that and we get around 215. So that tells me that around 215, I drew a line this morning. I want to make sure that whatever trade I take, in this case, a bullish trade, I want to make sure that I have exited the trade or have managed my risk inside of that range. And you can see how we got very, very close to that number. But what I might do an exit signal, or if price fell back below the EMA, that would be an exit signal. But ATR is a kind of a funky tool, but I love it. And it does take in considerations of gaps. And so if you look at our low here of, our close from the previous day of 209.13, and then added that ATR, then those would be in concert with our pivot. You will see how they line up very closely to that. So again, I would probably be using these as targets and then also as ways to manage my risk. So let's go back to our screener. Now I want to see Amazon today looks like an outperformer, right? Its change is up $7. Its ATR is only $3. So this is an outperformer. This is a market that is really striving. But if we went and looked at that risk management, again, using our pivots and our ATR, right? It was about a $4 movement. But here is the morning session. Here's that first morning session. And what was the low? Well, $4, that gives us around 190. And notice that was our second pivot resistance. So that would have been my first target as a day trader. The second resistance would be my next target. Again, I don't necessarily have to take off my trade as long as I'm continuing to see inter-momentum. And notice that we never really re-engaged our EMA. So this is a great way for day traders to combine some very easy reference points and using our template to magnify or manage risk and also look for some trading opportunity. Okay. All right. So again, let me just kind of look a couple of your questions before we jump to our finale. Here we are at the top of the hour. Oh. Yes, we do have pivots on futures charts. Question for Scott. And Scott, I guess, answered his own question. Yes, it is. Was a for day trading. What filters would you use to compare closing price to next day's opening percent price? So, well, we have a filter for that. That would be percentage change. Yes. Okay. All right. All right. So let's do this. Let's give you a quick takeaway before we finish up for today. All right. So again, depending on the trader's goals, your timeline, your thesis, right? There's thousands of stocks for us to look at, thousands, hundreds of ETFs, and they all can offer trading opportunities. Screeners sort, alert, and identify ways to improve our trading tactics. Remember that muscle memory. I want to practice the same routine consistently over and over and over, and I want to have a thesis on when I develop these screeners. I want to have a methodology, points of reference, and expectancies. And that's why they are really time-saving tools, right? Imagine how we did that one example where we just added 5 filters and we were able to get down to one stock, right? And that's what makes Barchart a great service, is because we provide both the means, that sorting, that selecting, that narrowing down, and that discovery, so that you can execute your strategies. All right. So again, I just want to remind you, there's your 52-week high plus filter, and there is that day trader screener as well. All right, so these are all inside of our file. So if you go to archives, you can see that here is today's session. The recording will be up later, but if you go to that page, here's where you can find those 2 screeners that I shared with, okay? And again, in archives, you can find all those different webinars that I mentioned. And here's the one on RSI. And there it is there. So you just can look for those webinars. All right, folks. I hope that you enjoyed today's session. I appreciate you guys hanging around for an hour today of your day. And those of you who are watching on our YouTube channel, give us a thumbs up and send us a comment of what you liked about today's session. I really appreciate that. Next week, we're off of 4th of July, but when we come back in 2 weeks, it's not up yet, but you can sign up to get notified, and I'm going to give you a sneak preview. We're going to talk about the conditions to find short trades, okay, or selling stocks. So I think that one's going to be a fascinating one. I think we'll get a lot of folks who'll be interested in it. All right, folks, I hope you had a good time. Until next time, the best of health, manage your risk, and the good of all trading.